Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Well, what we continue having here is a market that's climbing the proverbial wall of worries. And what I'm referring to is this market's having everything thrown at it, meaning we had fears of the China slowdown, the oil crash, and then we had Brexit, Britain leaving the European Union. We had terror shootings in Orlando. We had terror shootings of Dallas police. We had a terror attack in Nice, France, and we had a coup in Turkey, and we have now more police shootings in Baton Rouge, Louisiana. All very terrible things, but yet somehow the market is able to look past that and continue rallying higher, and that, in a sense, shows you how strong this market is, and I believe this trend will continue. If we look through a few things, the S&P 500 hitting all-time highs. As long as it holds above that 2030 level, which is way above that right now, the market's probably going to continue higher, and longer-term trend will still be up. Look, the Dow also hitting new highs. As long as it doesn't crash below 17,500, probably also the market will continue higher. NASDAQ not at new highs, but above that 5,000 level, and probably as long as it stays above the 4,700 level, we're probably going to continue making new highs. The Russell 2000, the small cap index, is not at new highs, however it did break out into a new yearly high, and actually it is outpacing the S&P 500 since that bottoming of the Brexit. And the Brexit could have been basically the last shakeout, shaking out all the weak hands out of this market as this market powers higher. Now, the transports still need a little bit more work to do, but again, they're coming off the bottom. And if we look at the Wilshire 5000, which is the broadest measure of all stocks, has a lot of small and mid-cap stocks in it as well, also breaking out basically right into a new high for the year. Still not at its all-time highs, but still doing very well. Now, if we look at the market breadth, we look at the NYSE Advanced Decline Line, that's hitting new highs. It's showing good market breadth. Sentiment is improving. It's not at all euphoric, so that's also a good thing. And also, if we look at the sectors, the strongest sectors in the S&P 500, we have the industrials, that's XLI hitting new highs, technology, a very important sector, the XLK, showing us that there is a risk-on type of market. And we have great improvement in XLF, the financials. Actually, regional banks are doing very well. If you look at a stock like MB Financial, a local bank here in Chicago, hitting new highs, 10-year highs, so that's really good. Now, this is also going on globally. There are some European indexes that still need some work. However, you look at the All World Stock Index, that's an ETF, that symbol is ACWI, that actually broke out to the new year high. Similar, we see that in the Emerging Market Index. If you look at EEM, that's the ETF, also breaking out into a new high for the year. And then if we look at the Asian Index ex-Japan, meaning that includes heavily weighted with China, South Korea, Singapore, and Taiwan, that also broke out into a new yearly high. So globally, we have markets moving, and this is a time to be invested. Pick your favorite stocks. We talked about a lot of these stocks over the previous weeks. You could be buying them on the dip, and actually the breakouts are working. You could be buying the breakouts. So in summary, it is that price and volume be your guide. Watch the price of the market, not the news. If you watched all the news, you'd probably never want to invest a dime for the rest of your life. The news is just terrible. There are terrible things going on. However, the market's looking past this and powering higher. So I'll say it once again, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Have a great trading week.